What's up, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be doing some in-depth stock analysis on Microsoft stock. This is a company I've never owned before, but it's definitely a popular one out there, and lots of people are interested. So we're going to do some analysis, run through my checklist, and we're going to find out, is this a good time to invest in Microsoft? First thing we're going to take a look at is the stock chart, because over the last 5 years, Microsoft, up until the end of 2021, was having a nice steady run, right? It didn't have too big of dips besides for the pandemic dip. Everything else is pretty much up and away. That is until the end of 2021. It peaked at $343 a share, and now we're down to $258. So it definitely didn't get hit as hard as some of the other similar companies, but it's still down a decent amount. So that's the first thing we need to look at. Microsoft is also a $1.9 trillion company, one of the biggest companies in the world. Now, first thing on our checklist, well, I want to point out, I condensed this checklist. It used to be 18 different items. Now we're down to 16 different criteria because I'm picking out the ones that are not as important. And so now we're down to only 16. So I believe this actually makes for a better analysis. First thing on our list, revenue. We take a look here, we're going to click on revenue. You can see over the last however many decades, Microsoft has had no problem growing their revenue. In the most recent quarter, they did $52 billion. That's only for one quarter. Then we're going to look at net income. Net income is a similar story. Look at the most recent quarter, $16.4 billion of net income. That is insane. Not many companies can do that. So both of those are going to get a check. Number three, we're going to look at the price to earnings ratio for 2023. Right now, Microsoft is trading at a 28 and a forward PE of 27. Now, this is one of the only things that concerns me on this list. As I look through all the different metrics and all the different things about Microsoft, this is one that stands out because look at here. Microsoft has been as low as a 7 and as high as a 46. But I would say the fair price is somewhere in the middle, probably around a 19 or a 20. Right? Probably a 20. Right now, it's at a 28. So definitely higher than usual. Not to say it can't go higher. There's a great chance that if the momentum is right and macroeconomics are favorable and investors are liking what they see, especially because the company just invested $30 billion into the OpenAI ChatGPT, that's probably also a good sign of a good lever for growth there. But that aside, this stock does have the ability to trade at a higher PE ratio. It could trade at a 30, a 35, maybe even a 40 PE ratio sometime this year, right? But it also could come down to more conservative levels and start trading at a 16 or an 18 again. So you have to weigh out those options. And just by looking at this chart, you can get an idea for how richly this stock is trading. I would say it's probably on the richer side. So that's going to get a no, just because it's a decent amount higher than where it normally is. Number four, is this company innovative? Do they have a moat? Most people know a little bit about Microsoft's history. They know the innovation that has taken place at this company for the last couple of decades. And so there's not too much of a question there. They are a very strong, innovative company. They have a very strong moat as well. The millions of people that use their products, millions of people that are subscribed to their services, that buy all the different types of products they make, not too much of an issue for this company, whether that's Xbox or laptops, whatever it is. This company has a lot of people using its products and services. One of the biggest ones is the cloud, and that's what we're going to take a look at right here. You can see it says Microsoft sells computing devices, cloud systems, and services, software, and other products to consumers and businesses. The company's intelligent cloud segment is the largest source of profit as well as the fastest growing. The other thing here is Microsoft announced in mid-January, this is not this past January, but 13 months ago, they acquired Activision Blizzard for $68.7 billion. And I will never forget this because at that time I owned Activision Blizzard, the stock, and the stock shot up. So I sold out that day. Now, but in more recently, I think I read some articles about there was some things getting in the way of the acquisition. So I don't know if it's entirely going through yet. There definitely were some questions that were raised regarding this acquisition. So we'll see what happens because that is a significantly large acquisition of $68 billion. So we'll see what happens there. But overall, I would say this company is very innovative and they have a huge moat. The other thing to take away from this article is that they're cloud segment, along with a lot of other companies like Amazon. AWS is probably the most powerful part of Amazon's business. Just like Microsoft, they have a cloud segment, and it's the largest source of profit and the fastest growing. So cloud is a big deal. Then we're going to get into, is the industry growing? Yes, not only with cloud, but with electronics, with all the other things that go into this, the different softwares, the subscriptions. Most businesses are subscribed to one of Microsoft's suite of products. Most companies are going to be using Word and Excel and all that stuff. So you have to take that into consideration. The industry is growing in regards to many different things that they're involved with. Number 6, the return on invested capital. This is another one that could be questionable. I did give this a no, because if we take a look here, not only at the history of their ROI, but also compared to competitors, because let's take a look here. Return on capital employed, the lowest it's been, well, I guess you can say in 2015 it hit -2. 2004 it was 2%. The highest it's been is 17% in 1997. But one thing I took away from this chart is that the first half of this chart has a much stronger return on capital numbers than the second half of the chart, right? Like what happened from 2012 to now, their ROI has been below 8%. So that's not what we want to see, especially for a company that had no problem in the 90s putting up 14%, 13% returns. Why in the last decade is it down to 2% to 8%? That's not good. And you compare it to competitors. Go look at Apple. Go look at, I don't know, whatever other company you want to go look at to compare them to. I would consider this weak. Now, the most recent quarter, they did 7%. Now, I don't want to say that's bad, because you could get away with doing 7%. It's just the fact that they are such a large, mature company, and I would think their business model will be a little bit more optimized and a little bit more efficient, and especially when you're comparing it to where they had it at in the past. So I don't think it's a good sign that it's been shrinking like that. And then you compare it against competitors, and it's also inferior. So I'm going to give that a no. Now, I'm being a little bit tough on some of these different metrics for Microsoft, but that's because they're such a monster of a company. They don't really have too many problems. As you can see, most of these got checks on my list. So it's still a strong company. Then we get to healthy cash flow. Yes, once again, it's a monster of a company. They make lots of money. So if we go to the cash flow statement, you're going to see they make lots of money, and they're investing their money. So operating cash flow has gone from $52 million in 2019 to $84 billion in the last 12 months. And they're investing a little less than half of that. And they paid off, or they financed $52 billion of, let's see, well, they issued stock. That was one of it. They paid a bunch of dividends. So things like that lead this company to having almost $16 billion of cash, and then free cash flow was $59 billion for the trailing 12 months. So that's going to get a check. Do they have diverse revenue streams? Yes, I already mentioned how they have their suite of products. They have the cloud, they have Xbox. Now they're going to have Activision Blizzard, probably, all these different things that amount to their billions and billions of dollars created. So they definitely have diversity there. Is the equity growing? Yes, this I was fascinated with, because I don't know about you guys, but I've never seen a company grow equity so fast. The equity in 2019 was $100 billion. Okay. Now, in June of 2022, it was 166. But look at the most recent quarter, $183 billion. And that was over 2 months ago. So it looks like this company is going to double their equity stake in a matter of 4 years. That's unheard of. I haven't seen any other companies get close to that, as the companies that are as large as Microsoft. Then we're going to look at equity. Equity is not 15% of the market cap. In fact, they need $285 billion of equity for it to be 15% of their market cap. As you can see here, it's only 183. Now, that's another sign that it may be trading a little bit too rich, right? It could be trading too rich, because if the market cap came down to more closer to these levels of $215 a share, let's say, then it would start to look a little bit healthier, that the equity would be a larger percentage of the market cap, and the PE ratio would be lower. Is the share count decreasing? Yes. So let's see. What do we want here? We want right here. Well, actually, we can also take a look on the other website here. Shares from 2004 till now, dropping the number of shares. So good job, Microsoft, in that category. Number 12, yes, there's tons of big money and investors, insiders, hedge funds that are interested in buying this. It's one of the biggest staples in index funds and stuff. So that's going to get a check. Is management respectable? Yes, I would. It's Microsoft. They've done a great job growing the company. They just invested all that money into ChatGPT, which shows they're investing in innovation. They bought Activision Blizzard. They grew their equity almost 2x in the matter of 4 years. The only thing they kind of they're not doing an ideal job on is that RO is their return on invested capital. Besides for that, though, it's going to get a check. Number 14, do they have more cash than their average income? Yes, I believe they have. I forgot. Let's check. So cash is $99 billion of cash, and their net income was, what did we say it was? Net income is 16 billion for the most recent quarter. So let's see, what is it? 16, 16, 17, 16. So it's, let's see, what is it? 32, 48. It's what is that? $65 billion of net income roughly, and they have 99 billion in cash. So that's going to get a check. Do they have a healthy dividend? Yes. It's not a big dividend, so I wouldn't really take it too seriously. It's around 1%. But the payout ratio is healthy, so it'll get a check. Is it over 20 years old? Yes, it is. This company was founded in 1975, so it is. So overall, it gets a 13 out of 16. So it's considered a buy, just because of how strong and powerful of a company it is. So it makes up for the lack of the cheap valuation, because it's not trading at a cheap valuation. It's not. But it's such a strong company that it's almost like whatever price you buy it at, you're going to be fine. It might dip for a couple of months or a year, but 2 to 3 years later, you're going to be back. You're going to be back in the green. So I don't see any problems in sight for Microsoft. They just invested all that money in AI. They should still continue to be a monster of a company for the years to come. And that's about it. So thank you for watching, and I will see you guys in the next video. Comment down below if you want me to do an analysis on a different stock.